This is the one that nearly broke me as a trader. I hit a drawdown I wasn't just prepared for. Not just financially, but mentally. I ignored my rules, overtraded, and let emotions take the better of me. If you're serious about trading, you need to understand what happens when your discipline fails. In the next few minutes, I'll break down what went wrong, how I recovered, and what every trader must avoid to survive in the market. By way of introduction, I'm Kojak's Pro, a seasoned forex trader, and I've been trading for over 3.5 years. In my journey to profitability, I have experienced several challenges, both rare and common to the trading space. I'm not a guru because I don't know it all, but I like to see myself as a professional, a guide with the sole aim of educating beginners and struggling traders on the best approach to trading forex. In this video, I will show you how I lost over $3,700, my pain, and most especially, how I recovered. If you're new to the channel, subscribe. Now let's get into the video. Now, what happened is I had been trading profitably for several months leading to the month of December. I've been having months of good trades. Sometimes some months go flat, even up to a quarter could go flat without much increment in my return on investment, which I usually calculate in percentage. My win-loss ratio was kept at a metric which I consider to be fairly high, at least 50 to 60%. So that just means that out of 10 trades, I win 5 to 6 times, and then I lose about 4 times. That's pretty high because in trading, you don't actually need to have that win rate, that kind of win rate ratio to be overall profitable. You can have an age or a strategy that gives you about 40% wins, but you still come out profitable. It's all about your risk management profile. Now, but we're not talking about that. So because of that, I had developed confidence in my strategy, and that's not the main issue. After those wins came a series of losses, starting from December all the way to May. So I had 5 whole months of no single profits. It was terrible, and I wanted to give up, but I didn't. Why? Because I know that the problem was from me, and I needed to tweak a few things here and there. After reflection, I realized that this is a problem that is very common to a lot of forex traders, and as funny as it sounds, this is usually the defining moment of many forex traders' career, because once you're able to scale this hurdle, you'll be very well profitable. If you don't, you'll give up, and usually streak of losses and blown accounts are usually what destroys a trader's dreams. So what actually happened? I became overconfident, and this resulted in me breaking my rules, mistaking luck for skill, and oversizing. Now, the trail of these problems are common among traders. I manifested all these in one shape or form, but the most profound of them was oversizing. After the first loss, which happened in December, and then the second loss that happened in about February, I noticed that I started to become more and more emotionally involved in my trades. I started to mistake luck for skill. I failed to notice that the market had changed from giving me favorable trading conditions because the market was trending and had gone into a range. I had become so used to trading and so used to stacking positions. I just wanted to continue winning. And with every new trade, I maintained the same lot size instead of reducing it. My account was on a drawdown. I was experiencing a severe drawdown with my accounts. Logic, at least calculative and practical logic in trading, suggests that I should reduce my lot size. There's a summary of this concept in trading known as the risks of ruins, which puts risk management, good risk management, in favor of having a profitable strategy. So this just means that no matter how good your age is or your strategy is, if you can't manage your risk, you will have a sour trading experience. What else did I do wrong? I ignored my trading plan. And when you break a rule in trading, it's easier to break the next rule, and the next, and the next. And before you know it, your trading has been converted to gambling, and the market severely punishes gamblers. A trading plan is what separates a professional trader from a gambler. Disregarding it removes structure, turning every trade to a guess. The third mistake I was committing, which I noticed late, was I began to misread the markets. Now, remember that first point I told you about mistaking a ranging market for a trending market? And more so, I began to notice that apart from doing that, I was beginning to force setups. I started seeing things that weren't there and decided to start trading on impulse. Now, to exemplify this, I did take a trade on USD CHF, and USD CHF was one of the trades that really hurt me. It was one of the most backbreaking losses I had this period. Now I had a setup on USD My setup was for USD to break above a monthly zone, which was a major zone, and then retest it. And then once it's about to move, or once it's about to kick off, I'll be able to buy low and then ride the trade upwards. But you know what I did instead? I went ahead to buy on the break of the major zone and the counter and the trend line. That's not my strategy. That's not my setup. My setup was a break and retest, as you can see in this case. But the trade didn't work out, and I lost over $700. The valuable lesson here is to stick to your plan, and most especially your A+ setup. My journey to recovery following this run of losses was slow but reflective. I had to really stay away from the chart, so I stepped away from the charts and went to spend time with my family, engaged in personal hobbies, and did stuff that weren't chart related. All this was in a bid to reset to my baseline mentality and cool down my emotions, like cool myself down really. Bert Steenberger, who is like a popular psychologist, recommends mental recovery time to emotional baseline, and this really worked for me. And when I was ready, I went back to review my trades, and that's how I was able to understand these errors I committed, because I want to move forward. If I don't have insight, I can't move forward. And what I realized after my reflective time is the market isn't the enemy. My ego was, and that was very humbling for me. Now we've come to the end of this particular video. I know you've gotten a lot of insights from this as regards my trading journey and my ordeal towards these losses I had in the last few months, and most especially how I dealt with it in order to stay afloat in this game. If you got any sort of value from this video, click the subscribe button, and I've also got a free ebook about the 6 mistakes that newbie traders make. I've attached the link of it in the description below. Go ahead, click it and grab your copy. And also I have a video that I recommend you to watch, and it's just right here. It's my previous video, and I'll see you next time.